Alrighty, we're live. I cannot hear you, Rachel. Nope. I can hear when you turn it on and off, Rach, but I don't it sounds like water. It doesn't sound okay. One sec.
Okay, can you hear me now?
No. No, ma'am. No.
What about now?
Mm.
What do I do?
Um
Okay, now? Yes?
mhm.
Okay, I can't hear you though.
Can you hear me now?
Yes,
Perfect.
I can.
All right, we're good. We're live. We had some
Okay,
hiccups. We had some technical difficulties, but it is what it is. Let's just go.
okay, you could see my screen, right?
I can see everything. Everything looks beautiful.
Okay, awesome. Hey, everybody, welcome to the live here. We want to give you our all and do the best that we can. So, today we're going to talk about top 7 strategies to save at least $10,000 on your taxes. And we speak to so many business owners who need the help, and now is the perfect time to review all these strategies so you can make sure that you're implementing it right before the year ends. I'm Rachel Mikulov. I'm licensed by the IRS, and I have a passion to help business owners save thousands of dollars in taxes. So let's just dive right in. So today we're going to talk about entity selection, bookkeeping best practices, the accountable plan, the home office deduction, travel expenses, the Augusta loophole, which everyone always talks about, owner's compensation, and so much more. So what we offer, and we offer, multiple services: bookkeeping, IRS state compliance, payroll, tax planning, estimated tax payments, entity consultation. We're a full service bookkeeping and tax firm. And what makes us different is we're a virtual tax and accounting department where we do everything under one roof. We help businesses with bookkeeping, payroll, sales tax, tax planning, everything under one roof. Whereas you have 3 or 4 different companies working for the business owner, and everyone is really confused as to what's happening. We'll talk more about this at the end, but I just wanted to give you a quick overview who we are and what we do. So tax strategy number 1 is entity selection. We speak to so many business owners who are so confused and they don't know what entity they are. So Amanda Lynn takes a lot of calls, all the calls that, and a lot of clients, we ask them, hey, what's your entity? Are you a
The
single
number
member?
one question. Yeah, we
Exactly.
definitely ask that. That's like the main question that have to ask in the beginning of these calls to understand, depending on how much money they're making, what type of situation we're looking at here. It's a huge part of the diagnosis.
Right. So we ask them, are you a single member LLC? Are you an SCorp? Are you a C-corp? What type of entity? And a lot of times they look at us and they're like, I don't know. I don't know what my entity is. So as a business owner, even if you have an accountant, you always want to know the type of entity that you are. It's a given, it's a must, regardless if you have an accountant or even if you don't, even worse, you should always know the type of entity that you are, and you should confirm that with your accountant. Here are 5 different, entity structures that you should be familiar with. You don't really need to know how to implement every single strategy or how to implement every single entity structure, but as a high level, as a business owner, you should really know, why are you, a partnership, or why are you an S corp? Why are you an LLC? you really need to understand, high level what these entities really do and how it benefits you or how it hurts you. A lot of business owners come to us and they're a single member LLC or they're a sole proprietor. And as you can see, a sole proprietor has unlimited personal liability. That means that you have no protection when you're a sole proprietor. You also pay the most in taxes, and you
Mm-hmm.
file your return, you file your business with your individual, which is also another high audit risk. You don't want that. What you want is you want to make sure that you're saving the most money in taxes and you are protected, from any lawsuits and from, you want to make sure that your personal assets are protected, which is super important. Let's go
Rachel,
next.
can you hold for 1 second,
Of course.
please?
Mm-hmm.
And can you mute yourself?
Sure.
Thank you. Thank you so much. We're good. We're good. Go ahead. Sorry about that.
Hey, do you hear me now?
Yeah, we're good. Go ahead. Sorry about that.
Okay, no problem. So the entity selections, and so we're going to talk about the advantages and disadvantages. So, as a sole proprietor, you want to make sure that you are doing everything you can. Depending on the type of entity you are, you want to make sure that you're doing everything you can. So, the advantages is you don't have to do much record keeping. You don't need to really pay yourself on payroll when you're a sole proprietor. The disadvantages that you pay the highest taxes and you have a high risk of getting audited. So, it's not really the best to be a sole proprietor, but again, it really depends on the type of situation that you're in, and you really need to have an accountant review your entire situation so they can see, okay, how much money are you making? What are your future goals? Um, what state are you in? What are, are you planning to make $1 million a year, or are you planning to stay small and make $200,000 or $100,000 a year? Depending on all these specific factors, then an accountant or we can tell you what is the best entity for you. You should
Right.
never go on Google and say, oh, I think it makes sense for us to be an S corp, but you're only making $30,000-$40,000 a year. It may not make sense because now you need to issue yourself be on payroll, and there's so many record keeping requirements. If you're a corporation, it just has to make sense, and you want to make sure that you're doing everything you can to protect yourself. A single member LLC is if you don't make an election to be treated as an S corp, you will be treated as, it's called a disregarded entity, and you will be treated as a sole proprietor, which means that you would be reporting your income and expenses on your individual return, and you are protected, but you are paying, more, a lot more in taxes, just like a sole proprietor. Okay, so a partnership, this is a third entity. A partnership is actually the most complicated. Partners pay high tax rates, and a multi-member LLC is treated as a partnership for tax purposes. You are not allowed to be on payroll if you're a partner. You're also not allowed to issue a W-2, and I see a lot of business owners doing this, which is why we always say you always want to hire one accounting firm to help you with everything, because most of the time
Mm-hmm.
when you have, let's say, if your accountant knows you're a partnership, and then you call a payroll service provider and you say, hey, I want to be, I need to issue, you need to issue payroll to yourself. What happens is they don't ask you what entity you are. And I've seen sole proprietors pay themselves on a W-2. I've seen partnerships pay themselves on a W-2. And it is not, you can't do that. It is not the best way to do that. So knowing your entity is so important. That's like the first question that any payroll service provider should really ask before issuing payroll, which is why we highly recommend having one company do it all, because as accountants, we're business advisors. We look at the entire situation, and then we move on to the second and third step. A
Rachel,
single
I had a question about this. Sorry, because just so that everyone knows, I'm kind of like on the operations side of things, and I meet a lot of our new clients. I'm not an accountant, but I have been with Rachel for a little more than 5 years. So even still to this day, I have I have plenty of questions about certain things. I when you said that a partner cannot put themselves on a W-2, what happens if they do that, or what kind of repercussions will they
They
face?
need to go back and amend their returns. It's actually illegal. You're not allowed to be
Okay.
in a W-2. It's not allowed. I actually bumped into someone in one of the masterminds, and he said he's a multi-member LLC and he's on payroll. And I'm like, what? How? He had to go back and amend all the payroll returns so it could be right. You have to go back and change it.
Okay. I
It's
see.
not accurate. So unless he converts the multi-member LLC to an S corp, then he could keep those payroll returns. But again, it really depends on the specific situation. So yeah.
Got
Okay,
it.
so
Thank you.
no problem. You're welcome. A C corporation pays 21% flat tax rate, and the disadvantage is that in order for you to take money out, you are double taxed. So sometimes it does not make sense for you to be a C corp, but sometimes it may make sense depending on your age, depending on medical expenses that you want to write off, because a C corp does have good advantages. But again, it really depends, and it really depends on the specific situation. An S corp, which is the most popular entity that a lot of our clients are, it really is I would think it's it's the best entity if you're looking to grow and scale your company. And it does help you lower social security taxes. So on your distributions, you don't pay the social security and Medicare, which is 15.3%. It does have lower audit risks than sole proprietors. You are able to deduct certain expenses. The disadvantages are you do have additional record keeping, so you really do
Mhm.
need to have an accountant. You need to make sure that you have the monthly bookkeeping, you're paying your estimated tax payments every quarter. And then you must be on payroll. So if you are an S Corp, it is required. And the IRS says this, if you don't pay yourself a reasonable salary, then the IRS will come in and choose a reasonable salary for you. And you don't want
Mhm.
to do that. You want to
Right.
make sure that you pay yourself, a reasonable salary. And you say, hey, IRS, I should be making 60K a year, at least something. But if you're not paying anything, it's a really big, huge red flag. And a lot of companies don't really understand the red flag. So it's really important to pay yourself a salary.
So I want to jump in here. I actually talk to a lot of clients who come to us and tell us that they've been an LLC or they had a super large tax bill last year. They don't know how to lower this. They're not informed. And I always tell people when you start hitting a certain number, you I call it like making the big boy business decision. Like you're
I
growing
love
into a
that.
bigger company, and it's like you're growing, but with that move comes some more responsibilities, right? So now that you're kind of expanding the business and growing the business, you're going to become an S corp. Um, Now you have some more responsibilities in the sense that you're going to now have to file a separate business tax return. You now have to do quarterly estimates. If you put yourself on payroll, you're going to have to pay those. So it's just a lot more responsibility, but it's part of the growth as a business owner.
Exactly. I 100% agree. And the issue that I'm seeing is a lot of accountants that are local, they keep the business owners small. So let's say you have a tutoring company or a cleaning company or even an e-com company that just started off with like $40,000 a year or 50,000, and now they're growing so fast, they're making
Mm-hmm.
150, 300. Their accountant is keeping them small, and they're telling
Mm-hmm.
them it's okay for you to be a sole proprietor or it's fine for you to be a single member LLC. But the
Yeah.
accountant's mindset is like, they want to prepare their returns at the end of the year, and that's what they care about. They're not thinking about with a tax planning perspective and the tax planning mind. So that's when you need to start changing, accountants as you're growing, and an accountant that fits your needs, that is able to look at the future and think about ways of how to save you money while you're growing your company. So that's
Right.
super important, right? Thank you,
Totally.
Milan,
Yeah.
for sharing that.
Of course.
Awesome. Perfect. Okay, so tax strategy number two, and I know we see this everywhere on TikTok and Instagram, everywhere, hiring your kids, and everyone thinks this is really easy. Oh, I'm just gonna hire my kids and pay them $2,000, and that's it, right? That's all I need to do. No, you really need to hire an accountant to make sure that you're utilizing this strategy properly. Because if
Yeah.
you don't, the IRS will disallow this strategy because it's not done right. So you can hire your kids up to $12,000 each year, tax free. You need to make sure that they are the proper ages. Okay, so make sure, you can't hire. I mean, you could hire your baby if you're gonna, if they're gonna be modeling for you.
I've seen,
But
yeah, that's a big one. A lot of people like to use them for like advertisements or like
exactly,
making them model their Amazon stuff. I don't know. I don't know what they're doing.
exactly,
It's
or
so
holding
funny.
a toy or
We
something.
make it work. They make it work to get those deductions. Trust me.
Exactly. Right. But they have to have the proper documentation. You can't just hire a kid that's like, let's say, working in a different state. It just has to make sense. They have to actually do the work. You have to have timesheets for them. You need to make sure that you're registered with Department of Labor. You have workers' comp insurance. Workers' comp insurance for them. It has to make sense. And if it's not, then what happens, you're not doing it right, and you can't expense them. So it also has to be done. I actually, sorry, so we had a client who came to us and said, oh, I want to hire my kids, and I gave them a 1099 at the end of the year. That defeats the entire purpose. The purpose for you to hire your
I
kids
can't.
is for you to save money, but you're actually, the on a 1099 they pay taxes on a
Yeah.
1099. So
Yeah.
you really have to make sure that you're giving them a W-2 at the end of the year. The kids are filing a return at the end of the year. Did you know the kids have to file a return as well? So there's just so many specific details, that TikTok and Instagram don't really share. And
Mm-hmm.
it's really important to share the facts, because you can't just hire your kids. It's actually fraud if you hire your kids and they don't do anything for you. They
I
need
really
to
think
be
that the
working.
best practice is to just hire an accountant who's really familiar with it so that they
Exactly.
can take care of it for you. Because honestly, it's not as easy as it sounds to do it the right way. The last thing that
Exactly.
you want is to save all this money and not have any time, and then out of nowhere receive a notice saying that you're in trouble. So
Exactly.
do it the right way from the beginning. Save the money. The thing is that an accountant who's going to try these strategies are going to do it. If they're a good accountant, they're going to do it as much as possible the legal way, not being scammy.
Exactly. And that's so important, because doing it yourself can, increase the risk of audit. And if you just do one thing that's incorrect, then you will, I mean, it's just gonna be a headache. I actually had another client that I'm thinking of right now who hired his kids, did everything the right way, meaning hired a payroll company and everything, but he forgot to get workers' comp insurance for his kids. And now workers' comp is sending him, like, I think $6,000 to $7,000 of fines because he didn't have workers' comp. And he's in New York, so maybe every state may be different, but
Mhm.
he thought, he registered with Department of Labor, paid them $1,000 a month, opened separate accounts for the kids, because you have to have a separate account for the kids. The funds must be paid from the business to the kid. You can't just, like, make a payroll and not actually pay
Right.
the kids, right? You need to open a separate account, a custodian account. And he didn't have workers' comp insurance, so now he probably saved a couple of $1,000s on tax, but he has an $8,000 workers' comp penalty. It just doesn't make sense. So doing it the right way and hiring an accountant will save you lots of headaches and thousands of dollars in tax. So what can your kids do? So they could clean the office, they could wash company
Mhm.
cars. They could do a lot of things. They could update
Good.
customer lists. They could, simple to advanced data entry. They could transcribe video or audio. They could go to the post office and, get you things. They could help you around the office, passing out handouts. I don't know what that is, but walking door to
But like
door.
handouts, Rachel. Handouts are like when you stand in front of the business and you give out like little flyers.
Oh, like flyers. Got it. Okay, cool.
Mhm.
Yeah. So, right. So, passing out flyers, local marketing. They could update your social media accounts, which I think is really the best thing. Like, if they do some videos or edit videos, because there's just so many beautiful apps out there that you can, put what, like, transcription on the videos and make
Mhm.
reels. I think
Yes, and I
kids
think
would
that the
so
kids
do
would
that.
love to do that. Totally. That
Exactly.
I didn't even think of that one. The kids are so much on the social media all day anyway that helping mom and dad do some marketing on Instagram is fun. So to them it's not really
Exactly.
even work. And that's considered tax, tax savings
Exactly.
for the business owner. So
A
that's so
hundred
cool.
percent. Even posting on social media, I pay somebody, whatever it is.
Hold on. Hold on. Rachel, your mic went out. I can't hear you. It did the static thing again where I can't hear you. Sorry, guys. Just give us 1 second. Oh, almost. That almost worked, Rachel. Whatever you just did. Mm-mm. Somebody get Rachel some new some new headphones, please. Anyone? Ah, Rachel, mute and unmute. Try again. Mm-mm. It just sounds like static. Sorry, guys. We'll be back in just 1 second. We're just trying to get her up and running again. Is that better? No. Now you're muted, right? Can't hear anything anymore. Can't hear you. Are you muted? You're muted. It doesn't want us to know all the good advice. Manny, you're absolutely right. That's hilarious. It's the big brother. It doesn't want us to know all the good tax saving advice. Damn it. All right, Rachel, you keep playing with your thing. I'm gonna go to the next one. I'm not the accountant here, but I'm gonna run through her slide because that's what I do. So let me see, Rachel, we were at what your kids can do. We're going to tax strategy number 3, which is make sure you have clean books. So, bookkeeping best practices. So, the first thing that as a business owner you need to do is set up your bookkeeping using QuickBooks Online. There are other services out there, but I think, Rachel, you might be back.
Do you hear me now?
Yay.
Yes.
Yes. Yes.
Thank you, God. Okay.
I was going to jump right in. You saw, I don't
Thank
play.
you. Thank you. Thank you for that smart move. Thinking on the go. Thank you. So you want to? Well,
Okay.
let's just see. Okay. So yeah, we spoke about what your kids could do. Perfect. We
Yeah.
discussed that. Okay. So tax strategy number 3: make sure you have clean books and bookkeeping best practices. So you really need to make sure that you're using QuickBooks Desktop or QuickBooks Online. We highly recommend internally that you use QuickBooks Online because it's just better, it's easier, and we just love it. Number 2, you really need to make sure that you're reconciling your bank, credit card, Stripe, PayPal accounts every single month, and any other merchant accounts that you may have must be reconciled every single month, because we actually had a client, an Amazon seller or an e-com seller, and his accountant, didn't reconcile one of his credit cards. And when he came to us, we were able to amend his return, include those expenses, and he got like a $40,000 to $50,000 refund. Now I'll tell
Woo!
you what happened. It was huge, and I'll tell you what happened. So his bookkeeper, saw that there were not that many transactions in the beginning of the year. Then July and August, there were not that many transactions. And then the fourth quarter, when things started picking up, there were a lot of purchases because he was getting ready for the fourth quarter. And when I asked him, hey, where are your other expenses? How come it's not reconciled till the end of the year, till December 31st? He said, I don't know, my bookkeeper, didn't do it. And I said, okay, let's go ask your bookkeeper and see what's happening. So he says, okay, my bookkeeper just forgot. I don't remember what he said, but we went ahead, we reconciled the entire year until December 31st, and we were able to get him thousands of dollars in refunds because a lot of expenses were not deducted on the return. And I think the bookkeeper said something like, I didn't know. You should have told me. When you hire people that are not companies, they expect for you to tell them what to do because they don't have any guidance, right? You're hiring a bookkeeper $20 to $30 an hour, and they're following your direction, right? When you hire a company, we know what to do. We know what questions to ask, and we're taking full authority on the entire situation. But bookkeepers, a lot of times, they don't think like that, unfortunately. So number three, if you're an e-com or an Amazon seller, you want to make sure that your inventory is updated monthly, because if you don't have your inventory updated monthly, then your books won't be accurate. So that has to be, up to date on a monthly basis. And you can use software like Inventory Lab and other softwares out there that help you with that. The fourth thing is you want to categorize all your expenses according to the IRS categories. That is super important. I've seen accountants put like a lot of, miscellaneous expenses, and on the line item on the return, it says $10,000 miscellaneous. What? That's a huge red flag. What does miscellaneous mean? And they will audit you and ask you, what does miscellaneous mean? Just put it in the right category. Is it advertising? Is it office supplies? Is it inventory? Whatever it is, it has to be properly categorized, because they're going to look at your NAICS code and they're going to match to see, are you over, they're going to benchmark your expenses and compare it to other NAIC, which is like the National Association code, your industry code. They will do that and say, oh, wow, your advertising is too high or your rent is too high, and they will compare it. But miscellaneous, nobody does that. Like, we never put a miscellaneous line item on the return, because there has to be a place where you could properly categorize that expense. Let's see.
Right.
Yep. And then number 5, never do your bookkeeping yourself. It just doesn't make any sense. Would I clean the toilet myself? No, you just hire someone to do it. I would rather do videos, lives, working on my business, managing my business, and do the higher level things. If you're a small business, if you're making like 50 to 60K a year, then it may make sense for you to do your bookkeeping yourself, because you really need to understand your numbers and your scaling. But if you have intentions of growing your company to the very next level, it makes sense for you to utilize all your resources and your time to grow your company by hiring, or doing sales or marketing, or growing your company by hiring the right people. So delivery is actually, delegated, and your clients are super happy. Doing your bookkeeping is not the best use of your time, and, just doesn't make sense. 6 is you want to make sure that you're hiring accountants who specialize, that they specialize in your industry. So if you're working with e-com, if you're an e-commerce client, you want to make sure that your accountant understands the e-commerce, bookkeeping, because it's so complicated. Or marketing agencies. I actually had a marketing agency, a client, who their bookkeeper did not deduct Kajabi because she thought that was like a game. And I was laughing. I was like, oh my God, Kajabi is like an online, coaching thing or tutorial software. And he's like, oh, I had no idea. And, or she, like, ClickUp is another, software that sounds really funny. But if you're in the entrepreneurial space, these expenses are 100% for business. So really working with a online accountant is super important for your business. And really understands your, what you are able to deduct, especially when you travel to all these conferences. And because we know that traveling to conferences is really required so you can grow your business. But a lot of local accountants may not understand that because they don't do it, right? I travel for business. I go to marketing conferences, and you need to really travel. And it's all about relationship building. And as you build a relationship, that's how you're able to scale your business. And
I think I hear that a lot too, Rachel, that their accountants are old school. and they don't know anything about like on the online world and like how to utilize tax deductions or what kind of strategies they can really implement because they're not a brick and mortar. And so that really in the last decade has been a huge need because people are blowing up when it comes to selling online or opening up their new business or opening up a new business or going on all these different types of ventures. They don't know. These old school
Right.
accountants have no idea. They don't even touch PayPal or Stripe.
Exactly.
So yeah, it's really important to make sure that your accountant has experience in whatever line of work you're in, or I mean, if it's not something that's so common, at least.
Right. I agree. I actually had another client last year, and we had to review her books, and she had PayPal entered in twice because her CPA tried to figure it out, and they were a local CPA firm. And we're not saying they're bad. They're not bad at all. They do good work. You know, every accountant tries their best, but you want to go to someone that understands your industry, and they did not
Yeah.
know how to reconcile PayPal, and it really hurt her. So, and I'm so excited to work with her. She's been applying for a year. She signed on last year in November. So super important to work with accountants that understand the online entrepreneurial space. The next thing is you want to deposit all of your income, business income, in one bank account, just so you keep track of all your business income. Because a lot of times when you deposit it into multiple accounts, a lot of things get lost, and then you misreport your income, and then that's when the IRS says, "Hey, there is a discrepancy. What's
Hmm.
happening? If you missed on your income, then let's see what else is missing. Or did you double count your expenses? Is something off?" And they will, go through a deep audit and ask you different questions. And then number 8 is pay all of your business expenses from your business account or business credit cards. You do not want to pay your personal expenses from your business accounts.
Say it again, Rachel. Say it again,
I
Rachel.
know. You do not want to pay your personal expenses from your business account. You need to be pay yourself on a salary and then pay your personal expenses from the business, from the personal. But it
Hmm.
has to be done the right way. And a lot of our clients don't know, which is why we always say you can hire a bookkeeper to do the data entry. You can hire a payroll company to do the robotic work, but you need someone to advise, and give you advice and tell you, hey, don't do this and don't do that. And that's where us Empire Tax advisors, we come to you and say and advise you, which is what makes us very different than most accounting firms, because we go out there and we advise clients on what they could do to reduce their taxable liability. How can we help businesses reduce their red flags? And if something is a red flag, let's have a conversation and talk about it. I think, Amanda Lynn, you just spoke to a client about this, didn't you? Do you want to share on, obviously don't mention the client's name, but, what do you think?
So I actually just had to bring it to it's a new client that we just started working with recently. And we onboarded him, and we knew that he had a mess, and we knew that it was going to be a bit of a task to go back and do some catch up cleanup for the past year or two. Um, I just wanted to make sure that moving forward, he understood how important it was going to be to keep these things separate. And so when I onboard new clients, I make friends with them. I want to make sure that they're very extremely comfortable with the process and who they're sharing this information with. And I'm known to give out my cell phone number and just be like, hey, hit me up, whatever it is. And so I call him up and he's like, call me anytime. I call him up and he's like, yeah, I know. Moving forward in 23, we're going to be like completely separate. I'm like, okay, good, because just so you know, we're not doing this. Like we need to
Right,
make sure. I think our part of our job as the accounting team is to also keep them accountable to do their part too, right?
right.
We say we have a promise to deliver things to you, but you have a promise to us too to make sure that you're doing your part and
Mhm.
keeping in contact and like answering us when we need when we have questions on reports and things like that.
Right.
So
So we can
yeah,
help
he was
them.
super right. So it's all for the benefit of the client and the nice clean keeping of everything in the organization. But yeah, he was really really down to earth. He was super on board with the plan moving forward. He knew he made mistakes in the past and was like ready to be He was
I
like,
love
I
that.
got this. He's like, I got this. Everything's going to be separate. I promise. We're paying me now. He's like, that was a big thing. You're paying me now on payroll. So I don't have to dip in or use the card for things. I'm like, oh, yeah, great. Wonderful.
Exactly. And we're so grateful to be working with him. He's such a super sweet guy, and I can't wait to help him. So I love
Yeah.
hearing stories like that when somebody comes to us with a huge mess and they're like so afraid, and now we're like, yo, let's clean up your books, let's get you on payroll, and just give them so much peace of mind. So that's beautiful. I love that.
Yeah.
And then number 9 is,
Actually,
yeah.
another big one
Hmm.
too. Now, him being able to see what he's doing with his business, he's opening a whole new location,
Wow.
which he grew from like nothing to like millions in just a couple
Mhm.
years. Now he's grown so much he needs a whole new location. So he's good. He's doing amazing, huge
Wow.
things,
I
and I'm
love
so
hearing
happy that we're gonna be like on the journey with him. So yeah,
right.
super
Love that.
exciting stuff.
That's beautiful. So number 9 is pay for your credit cards from your business account. You want to make sure that you're doing that so it could properly be deducted. Keep track of your loans made to your business and where your income is coming from. A lot of times the IRS may assume that a loan is income, and if you're getting a loan from a company or your mom or your grandmother, whoever it is, or a friend, you want to make sure that you properly are tracking these loans and you have a loan agreement, because the IRS will assume that is income unless you have proof that it isn't. I highly recommend never putting like a cash loan in your bank account. If you're ever taking a loan, it should be a transfer from one account to another just so you're able to trace it, or a check just so the client would say, it's going to say, or like whoever's giving you the loan, it's going to say loan on the memo, because the IRS will assume that it's income and then you would need to pay tax on that. But it's always best to protect yourself and make sure that you're not paying tax on your loans. Okay, so then 11 is make sure you report your 1099K income. We've had a lot of new clients come to us and they did not report their 1099 income, so they got a CP 2000 notice. And I mean, it gives the client, like when you get an unexpected tax bill where you owe 50, 60K a year, it just gives a lot of people anxiety. And I actually had a prospect come to me with this specific situation. He reported the income, but he didn't report the 1099K. And I remember him messaging me. It was like 7 a.m. And he's like, I can't sleep. I can't sleep. Do I really owe this? What's happening with my taxes? Oh my God. He was so uneasy with like what's happening. And he didn't have the peace of mind. He couldn't work for like a few days until he was able to resolve it. But knowing and making sure that you report your income is the best. It's really important. Plus, he did his return himself with one of these online softwares that don't really help you. That don't
Please don't
really
do
fix
that,
it.
you guys. Please don't do that.
Yeah. So good record keeping will help you pay less tax and avoid penalties and interest. It will help you file your returns timely and accurately. So a lot of people come to us and they don't file their returns by March 15th because they procrastinate their bookkeeping all year round. What
Mm,
if you have all your bookkeeping done by December or January, let's say, then it's just easy because corporate returns are due March 15th, individual returns are due April 15th. So you want to make sure that you're filing these returns on time. And even if you have an extension, you never have an extension to make a payment. You only have an extension to
to
file
file.
your return. So you need to have your bookkeeping done so you could properly calculate your payment by March 15th and make that payment timely. So I have to say that because a lot of people are just confused about that. They think they have an extension to pay and they do not. Um, so lower your chances of getting IRS audit, and will help you survive the audit if you're ever audited. It monitors. It helps you monitor the progress of your business and identify your sources of income, which is super important because you want to make sure what's working and you're doing more of what's working and you're doing less of what's not. Because we only have a certain amount of energy, and if something is not working, you want to hold that energy and use it on things that actually make you money. So tax strategy number 4 is the Augusta loophole. I know a lot of people are talking about it. This is also called the 14-day rule. The IRS allows a business owner to rent their primary residence or a vacation home to their business up to 14 non-consecutive days. So it has to be, keyword guys, less than 14 days. If it's over the 14 days, then you have to pay tax on it. If it's less than 14 days, then it's fine. So What happens is you rent your home to the business. The business, you need to have an invoice from the business to the personal, and it has to be properly calculated. So you can't just say, I'm going to rent my home today for $5,000. No, it has to be properly calculated around your area, what dates. Here's a tip: it's always best to rent your home during the holidays, because if, like, Valentine's Day or Christmas or New Year's or Thanksgiving, anytime when you make a holiday party or an event during those high holiday days, the rent is always going to be a lot more expensive, right? Regular days, if you do, let's say, February 1st, it's going to be maybe $200, but on Thanksgiving Day or after that, it's going to be like $800 to $1,000. And if you have those company meetings within those days, the high holidays, you're able to save thousands of dollars in taxes if it is done right. So you have to write a check. It has to be a proper expense. And there are a lot of rules that go into this, just like the hiring your kid situation. Don't do this on your own, because if you don't do it right, then you will end up paying taxes on the personal level. The business pays your personal name a rent fee, just like you would have paid any rental, right? And on the personal level, you don't pay any taxes on it because it's less than 14 days. That's why this is super important. And it is a very high level strategy that a lot of people are using online. And honestly, a lot of accountants don't know about this. They don't know how to do it. They don't know what are the specific rules to do it. And there are a lot of, there's just a lot, there's a whole checklist on how to actually implement this strategy. But this is like the overall strategy to make sure that, you know it at a high level. And if you speak to your accountant and say, hey, have you heard of the Augusta Loophole? And they don't know it, you know that they're more of an old school accountant, filing returns, doing the data entry. And I know a lot of people that don't know this strategy. I actually spoke to an attorney a few years ago who called himself a tax planning specialist and did not know this strategy. I was shocked. So people could think that they're high level experience. They could call themselves a tax attorney, and they may not know this strategy. So you really want to work with people that understand these strategies and know how to implement it. This is another one. Tax strategy number 1, the accountable plan. So here's the definition. An accountable plan allows employees, and this is specifically owner employees, because if you're an SCorp, you're the owner of the corporation, you're also the employee of the corporation. So it allows you to deduct, right? So it allows you to deduct specific expenses like mileage, auto expenses, home office, travel, meals and entertainment. And it's so important because you have these expenses that are being paid from the personal account, but you want to get reimbursed from the business account, from your business, right? And in order for you to be reimbursed, you need to have a accountable plan between the business and yourself. And I am proud to say that all of our clients who are monthly CFO clients, we have an accountable plan signed by the client in their secure portal, which is why we do this for them and why they hire us. And if the IRS ever asks for it, hey, you just reimbursed yourself $3,000-$4,000 for, whatever X, Y, home office expenses or whatever. Where's your accountable plan? We're able to pull it up, show it to the IRS, and boom. So it's super important to have an accountable plan in place. And this is like a hidden strategy that a lot of accountants don't know about. And if they do, a lot of them don't implement it. So this is like another way that you can save at least $2,000 to $10,000, depending on the range of the expense and the range of the expense. So tax strategy number 6, home office. So if your office space is located in your house, you can deduct your bills for utilities, homeowners insurance, homeowners association fees, security, your alarm, your general repairs, your maintenance. A portion of your mortgage interest, property taxes are deductible. And there's so much more. Obviously, like if you have a lawn care or if you have other things and furniture for your home office, all of that can be deductible. And again, it depends. This is why we could give you the high level strategy, but you need to speak to an accountant based on your specific situation.
To ask you the right questions, because I feel like people don't ask you the right questions. You need someone with the knowledge to know to ask the right questions.
Exactly. So it's super important to use this strategy, and this is another tax savings, possibly around, let's say, 2,000 to 5,000. Again, depending on how big your home is and what your expenses are, it could really range, and it could definitely benefit you and get you have you. I mean, make you be even more profitable so you can pay less taxes, basically, because it's something that you already have. You have a home office anyway, so why not deduct it, right? It's there, and why not? Also, your internet, your phone, things like that. If you're utilizing it, just why not? Just let's deduct it. Okay. Travel tax strategy number 7: travel expenses. So business travel is allowed for several reasons for business owners. Often business owners they can be reluctant to take travel related deductions. So if you're traveling for going to a mastermind, or you're meeting like I traveled to Amanda Lynn, I went to Orlando for a recent conference. I deducted all of that because it was deductible. It was business related. If you're traveling to see one of your employees, or doing a conference, or you're speaking somewhere, travel for new business, conference and seminars, board meetings are all deductible. So just make sure that you're properly deducting all those expenses. But guys, remember this: if you have excessive travel expenses, you may run into a high audit risk. So you want to make sure that it's not excessive, and you have proper receipts, proper receipts to substantiate these travel expenses. Again, an accountant would be able to tell you if it is excessive, because we prepare hundreds and thousands of returns. We know what's excessive or not. And then tax strategy number 8 is owner's compensation. So it's really funny where when I speak to business owners, I ask them, how did you come up with your salary amount? And they go, oh, my personal rent is $2,000 a month. My children's tuition is another 2,000. My car is 1,000, whatever it is. So I think I need about $70,000 to $80,000 a year. I think that makes sense. So the way you're calculating, that doesn't make sense. The IRS actually does not care how much your personal expenses are. So for example, let's say I hired you, Amanda Lynn, did I ask you how much your personal rent is? No, right? I did not, and nobody does. Do I ask you what your personal tuition for your children? Like, we don't ask those questions on an interview. And we ask you, what are your skills? What are you able to do in the company? And what's going to be your job description? And what's your degree level? We need to ask the business owner the same exact thing, and base their salary based on what they are actually doing in the company. Are they doing, are they speaking? Are they marketing? Are they doing project management? Are they doing a portion, 20% marketing, 10% speaking, 10% sales, 20%? Like, what are they doing? And we actually have a software internally that asks all these beautiful questions, and they come up with a salary for the business owner, and the IRS approves it. The IRS loves it. So even if you're making $1 million a year and your personal expenses are $70,000 to $80,000, if you pay yourself, let's say 50 or 30, whatever it is, depending on your education level. And by the way, the lower the education in this case is better, because if you only have an associate's degree, you could pay yourself a lot lower versus higher. When you pay somebody, you could pay yourself, like if you hire somebody with a master's degree, then obviously you need to pay them more.
You're ready, right?
So your degree level, the things that if you're not even working in the business and you have a lot of employees running the company, then your payroll does not need to be so high, because you have other people doing it. So it really depends on the specific situation. And there's a lot of misinformation out there that people say, oh, I need to pay myself a reasonable compensation. I'm making $5 million, so let me pay myself $1 million.
Hold on, Rachel. We lost you again, I think. Yeah, your audio. So play with your. Sorry, guys. Whatever you did last time, Rachel, that worked. In the meantime, No, I'll let you know when I hear you again. Mute yourself, unmute yourself. I'm buying her. There we go. No, go back. I'm sending you a holiday gift of the headphones. I can't deal with this. Mute, unplug your headphones, plug it back in. God. Estimated tax payments. Oh, I could talk about this because I know about this stuff. Okay. Reasons why you want to pay your estimated taxes on a quarterly basis. So, if you owe more than $1,000, then you get an estimated tax pay. Oh, there she is. Every time I start talking, your mic works. It's like
Sorry.
they don't want me to share. Okay, go ahead.
I'm sorry. Okay, good. Thank you. So estimated tax payments. So Amanda, how many times do we have clients come to us and they say, what are their biggest fears? Their biggest fears are having, I mean, you tell me, actually.
Um, their biggest fears are usually that they're overpaying in taxes or they're doing something really wrong or that whatever their lack like I've heard people say I'm scared that I'm literally going to get in real big trouble because I haven't filed or I don't have anything organized and I started making really big numbers and I'm not doing any I know I'm doing nothing right now. So I think
Right.
people have a real fear of like, they say the IRS will come knocking on your door and people really fear that. And when you're someone that's starting a new business and just learning about all the like different things that you have to manage as a business owner and the responsibility of what making money means in this country, that can take a toll on your health. I've had clients literally tell me it's making me sick. I can't sleep.
Right.
So, um, they need, if you are a mechanic, your job is to fix cars. You have a good business fixing cars. That's what you do all day. How are we going to expect you to understand what to do when it comes to the accounting and the IRS?
Right.
Just say you
Right.
need to hire someone to do that. Who
Right.
knows?
Exactly. So when I spoke to when I was taking the sales calls like 2 3 years ago, I remember I spoke to a client and he said his biggest fear was having an unexpected tax bill at the end of the year. That was one of the biggest fears as well. And then he actually did. So his accountant gave him a $40,000 tax bill on March 9th for his corporation. He was in New York, and he was just like, how did you do my bookkeeping? And he actually had a bookkeeper and an accountant who he truly loved. He did not want virtual CFO services. He loved them both. But I said, how are you loving them both if they helped you or they hurt you and they gave
Mhm.
you a 40K tax bill last minute? Like, it just doesn't make sense. The purpose of bookkeeping is for you to understand where you are every single month, and then pay the quarterly estimated tax payments every single quarter based on your actual numbers. You don't want to pay way too much, and you don't want to pay way too little, and you do not want to have an unexpected tax bill. And he was just done with them. He was like, if you could tell me that I need to pay 10K per quarter and not have a 40K tax bill at the end of the year 3 days before the deadline or a week before the deadline, I would be forever grateful if you just do that one thing. And of course, his bookkeeper or accountant didn't really review any tax planning strategies. He was a single member LLC, and if he incorporated
No.
as an S corp, he would have saved so much more. And it, like, they didn't do tax planning strategies, and it was really bad. So which is why he's now still a client. And this was like 2 years ago, I think. I don't remember. But a lot of people, they don't want to have an unexpected tax bill. They want to pay their taxes quarterly, or a lot of our clients, they don't want to make that payment, but at least they know what their balance is. So it's not a surprise. So let's say, hey, Madeline, you made X amount, you owe 10K this quarter. Hey, Madeline, you didn't make a payment the first quarter, so this quarter you owe another 10K. Just an FYI, you're going to owe 20K. Okay, that's fine, no problem. Hey, Madeline, you owe 30K now. Hey, Madeline, you owe 40. Okay, so hey, I told you all year round. I warned you about it. Now
Mhm.
you owe $40,000. You're prepping for it versus not knowing anything the entire year. And now 3 days before the deadline, hey, you owe $40,000. What? How? Where? What? Like, it's just a
Yeah.
shock to the business owner. And it just really irritates a lot of them. And they don't want that. So, you want to make sure that you're paying your estimated tax payments, and there is a penalty if you don't. Honestly, it's very minimal. It's not that much, but you know what? It's expensive not to be compliant. And you
Yeah.
want to be compliant. It's more expensive not to be compliant. So you want to make sure that you're doing the right thing and making those estimated payments. You should be paying estimated payments if you owe more than $1,000, and you should really pay estimated tax payments, as we mentioned, if you have a large tax bill at the end of the year. And this is really true. Once you get behind, it is very hard to get back on track. I have another client who closed her business because year one she owed 40K, year and she couldn't pay it. Year two she owed like 40, 50K, and then she had a six-figure tax bill. It was overwhelming her. It was giving her anxiety. And then you know what she thought? She bought home furniture and she thought it was deductible. And I'm like, what? And she's like, I just spent all my money because I thought home furniture was deductible. And I'm like, I don't know. So because of the guidance, she didn't have guidance. She
Mhm.
made bad decisions. And as a result, she had an unexpected tax bill, which she didn't have the money to pay. And now, I mean, she was pretty young, maybe in her like early 20s or late 20s actually. And she just like she had to close her business and go and get a job. So you don't want that. Getting your business right from the start will help you be in business for a very long time and so you can grow and be profitable, and that's what everybody wants.
Yeah.
So these estimated tax deadlines, the first quarter is April 15th, second is June 15th, third is September 15th, and January 15th is the fourth quarter. So make sure you make the payments to the IRS and the state. Don't forget about the state because they will penalize you. And a lot of times the states are a
Mhm.
lot more aggressive than the IRS. And a lot of people don't know that. New York State is very aggressive. California is very aggressive. They're a lot worse than the IRS.
Mhm.
And, you know, it's just always better to pay it. Okay, so bonus. Here's a bonus for you guys. You know, you want to know your payroll rules and payroll best practices. You want to register with Department of Labor. You want to review to see if you have workers' comp and disability insurance in New York State. You're required to. We're licensed by the IRS. I'm licensed by the IRS, and I'm licensed in 50 states. So every single state is really different. Having the proper paperwork before you hire employees is super important. So if you have a W-2 employee, you want to make sure that you have a W-4 and an I-9 form. If you have an independent contractor, you want to make sure that you have a W-9 form from them. And you really need to make sure that you are properly protected. So do you have, you know, NDA, a non-compete, a non-solicitation? So you know, before you hire them, because once they leave, they may share your company secrets with your competitors, and you don't want that. You want to make sure that you are properly protected. So that's super important.
Mhm.
Having another bonus would be having an all-in-one accountant can truly save you thousands. When you have three or four different people, a bookkeeper doing your books, a payroll robot, and I always call them a robot because all they do is really put in the hours, put in the amount of hours that you worked, and they process pay your
Yeah.
paycheck. They don't check, right, if you have a Department of Labor registration. They don't check if you have a workers' comp. They don't look at your entity. They don't help you with any of that. And then
It's that
filing your
entry. It's just literally that
exactly,
entry.
exactly. Then you have another accountant filing your return at the end of the year. Then you have another accountant helping you with these notices because a lot of these tax
What do you
prep
think's
costs
gonna happen when you have three
exactly
or four different people helping you with the accounting side of
it's
things? You're
chaos,
literally going to have such a mess because you have it's like and
right?
then what happens with the tax at the end? You're literally have a bookkeeper, a payroll, of this and of that, and then your taxes is not gonna be like it's like playing a bad game of telephone.
Right,
It's like
exactly.
oh,
It's
this is
not
what happened. Oh,
accurate.
I forgot about this. I forgot about this. I tell people all the time on my calls that um y- having the all in one service is so beneficial because you're working with the one person all year round. That person is going to know if you had a new child, if you invested in a new property, any kind of change that you've had, what your quarterlies were like, each strategy session that you had throughout the year. It all really benefits you if you have a really organized accountant to have a really well put together tax return at the end and save as much money as possible. There are other accountants that do all in one service. I mean, it's a huge benefit.
Right.
So that is something we definitely recommend to people who are, who need bookkeeping. It's not just bookkeeping, it's so much more.
Right. And then the notices and the sales tax and the estimated tax payments, because you need to know.
Compliance.
Right. It's just a lot. So having one person helping you with it all who is licensed by the IRS it just benefits the business owner overall.
Yeah.
And then the action list that we have here is you want to make sure that you choose the right entity that's best for you. You register with Department of Labor and you start paying yourself a salary depending on the entity that you choose. You want to make
Mhm.
sure that your independent contractors are classified correctly because the IRS is actually looking at that. And if you are having independent contractors that are not properly, out, like if they're an accountant and like let's say an accounting firm, if you have accountants working for you that are independent contractors, do they have their own business? Do they not? They technically should be W-2s depending on what they do and what their skill level is. A lot of times when you provide their computers and you provide the skills, and if they're like a POC, a junior accountant, they technically should be a W-2. Or if they're like, let's say a mechanic and they're washing your cars, or a daycare and you're coming into the specific location and they're working at a specific location, you have specific hours,
Mhm.
they need to be on a W-2. So making sure that you are classifying your independent contractors properly is super important, especially if you're paying them to their individual name. Because then if they don't have a real business, they're not a business, and they're going to start asking them, hey, who is this person? And they're going to start, questioning you. Are they a business? If they are a business, then, they're not going to question if you pay Staples, right? They may question someone if they're paying, like let's say a
The
mandolin. If
name.
I paid a mandolin directly, that would be an issue. So you want to make sure that you're paying people properly and you're classifying them either as W-2s or independent contractors, and you have proper agreements in place to protect your decision. Then you want to make sure you have the right documents, like I mentioned. Make sure to have workers' comp insurance before hiring employees. Even if you have an employee working for you for an hour, you still need to have workers' comp insurance to be protected. Know what expenses are deductible and are not deductible. I know a lot of business owners don't know what's deductible, so you want to make sure that you understand what's deductible. The IRS says whatever is ordinary and necessary for your business is deductible. So you need to tell your accountant, hey, I need to travel to California for this conference because I need to speak at this event, and I need to go to Disneyland because I'm going to speak at this event near Disneyland. That would be
Yeah.
deductible because it's work related.
Right.
So
Or a model who can pay for. I learned that. So reasonable. What is it, Rachel? It's reasonable and what? Ordinary.
ordinary and necessary.
Ordinary and necessary. So a model would need, like, I don't know, hair
Makeup,
services or
right,
whatever, makeup. So
right.
those are all things that make sense for the line of work that they're in. Whatever line of work you're in, you're not the mechanic is not going to need hair services, guys.
Exactly. 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 It has to be ordinary and necessary. So the next thing is like pay estimated taxes quarterly. And then most importantly, hire an accountant so you don't have to remember everything I told you. Like it's a lot
Right.
of information. You can go crazy and like it's just really funny, but it's true. And then so pay your estimated taxes quarterly or at least know the amounts. Actually, that's difficult.
We had a good question that hits on number 10.
Yeah.
Sade King asks,
Hmm.
when should you file your company taxes with your personal taxes, or should you always keep them separate? So I'll let you answer. I know that it depends on the entity you are, right?
Yes, it does. Yeah. So if you're a single member LLC, not taxed as an S Corp or a sole proprietor, you file your returns April 15 on a Schedule C with your individual return. If you're an S Corp, your returns are due March 15th. So it really depends on the
Rachel, I'm sorry. Again, we lost you. So just try, Rachel, to get yourself back on. Sade, I know that Rachel, mute yourself for a second because I hear your static. and I'm sure they can. Um, so yeah, Sade, basically it depends on your entity. If you're an S corp, you're due during corp taxes. It's not a choice. So I think the way you're, it's still staticky, Rachel. I think the way your question was asked is like what or when should you keep them separate. So it depends. It's always going to depend on the type of entity that you are. Your personal is going to be separate if you're taxed as an S corp or any type of corporation. So if you're an LLC being taxed as an S corp, it'll be separate. Or if you're a partnership and have a partnership return that you need to file, that will always be separate because what happens is a K1 gets exuded from the return and you apply that income into your personal taxes. You guys, I know the basics working here. Hey, Rachel's back.
Yeah, you hear me?
Yeah.
Hopefully this is gonna be the last time. Yeah, I don't know. It's so annoying, but okay. So as professionals and business advisors, we actually, I'm sorry, Madeline, I didn't thank you for that. So thank you for sharing that. I
You're welcome.
appreciate that.
Of course.
Thank you.
No problem.
Any other questions? Just maybe because I don't see the comments or whatever. Just ask us and we'll help you.
Tony did ask, is it better to use a local bank or an online bank for business?
I don't. I That's not an accounting question. I don't think it really matters. I
I
think it
think
really. Yeah.
I think I actually just recently got into um a discussion with one of our accountants, a really unknown bank, right?
Mm-hmm.
So it depends.
Mm-hmm.
I think if it's a mainstream bank or like a one-off, like I don't know, small bank in your town, our client is literally using this like bank that we've never heard of in our life, right? And so when we upload the expenses,
Mm-hmm.
there's no description. And so it's very hard to do the reconciliations based off of the way these transactions look on the
Right.
report. So if in my opinion, I would say try to go with a more major stream bank. It doesn't matter if it's an
Right.
online one, but just someone that has like a ton of customers because that means that their services are better, I think.
Right.
I
Right.
wouldn't use a small local bank. I would be
I don't
scared that they
either.
weren't going to give me the type of reporting that I needed.
Right. I personally bank with Chase. I'm a private client with Chase. They treat me really well, and then I have a personal banker that actually comes to my office. If I need to sign anything, she comes to me. I
Right.
never go to the bank. I don't know. So I think just having that service is so amazing, and it just benefits me. I have her cell phone number if I need a loan or a credit card or
Yeah.
another credit card, or I have a new corporation that I need to open. I just email her. She opens it for me, and she's my contact from Chase. So having that personal touch is everything for me. If your bank is able to give you that personal connection and for you, so you don't have to wait hours online,
Yeah.
I would bank with them. For me, time is money, and I hate waiting online. I don't have the time for it. I
Rachel, you're
never
so
wait
funny.
online. That's my
She's
rule.
like, I'm not waiting online. I'm so
I'm not.
sorry.
I go in, I go right back out. I don't have the time to wait online. It's a luxury. So, and I'm not gonna. It's a waste of time. So, yeah. Okay, so we can help you. We have three goals in mind for you to save the most money in taxes, like thousands of dollars at least, to make sure you're compliant with the IRS and all states, and then also reduce the risks of audit. And a lot
Huge.
of, yes, and a lot of the strategies that I shared with you guys today will help you save at a minimum 10,000 and maybe a maximum of like 40 to $50,000, depending on what your bottom line is and what strategies you utilize. There also, I didn't even mention retirement benefits, because that's what everyone goes to when they think of
Hmm.
tax planning. Go to your local accountant and you'll say, hey, what are tax planning options? The first thing they're going to say, oh, you could put $6,000 to 7,000 to an IRA and you could save a couple of $100. Like, that is so boring and old school. And a lot of times, a lot of entrepreneurs, they do not want to put money into an IRA because they would rather invest that into marketing and get that 4x ROI or hire a salesperson. They may do that later in the years when they have a much higher profit and it makes sense for them to do so. But in the beginning years, I didn't put money into a retirement. I put that money into marketing. I put it into Google ads, into Facebook ads, because I know that I could immediately get a 2x or a 3x ROI on my money, and that's how I was able to grow this multi-million-dollar company and hire proper employees so we can grow and scale, and I could be out of delivery where business owners really need to have that goal in mind where they monitor delivery and they monitor everything, but they don't need to do everything.
Yeah, that's
And
important.
you exactly, and you need to have the proper employees. And now employees are pretty expensive, so you want to make sure that you're having the top people on your team so they could over deliver and and help you. So yeah, I don't know why how I got into that, but that's like one of the retire. I didn't go into retirement like I mentioned, and they oh my god. And once we go into that, then you could save thousands of dollars in taxes, and even more. It could go up to like six figures. Um, and then now it's up to you to decide. You can either hire a separate person to do all of your bookkeeping and then your taxes and separately, or you can really have one company do it all for you. And that's what we recommend. And they should always be licensed, guys, because when you don't have a license, you're not, you don't have any professional authority above you. And when you are licensed, there are specific rules that need to be followed. And I mean, it's really important. I've seen so many accountants do things that don't make any sense. And having a license is super important. So, schedule a free call with us to see how we can implement these strategies for you. I really hope that you enjoyed this presentation, even with the technical difficulties. I'm super sorry.
We'll get it down. It's
Yes, we'll
okay.
get it down. This is our first, webinar in our Facebook Live, so I think we did fine. And if you really enjoyed it, please let us know. If we gave you some strategies or ideas, let us know what they are so we can, share it with the world. And the feedback really helps us to see how we can do even better in our next webinar.
Yeah.
Our passion is to help clients, business owners save thousands of dollars in taxes so you can go back and really, have the freedom and do the things that you really want to do. Because every single time when you have another tax bill or an unexpected tax bill or like payroll, and it's really stressful to overpay people, and sometimes business owners don't even take a salary for themselves for 2 or 3
Yep.
years, and I was like that too. So saving money in the very beginning is super important, and then scaling with your accountant to make sure that they're helping you every single step of the way in every tax aspect or type of tax, like payroll, bookkeeping, sales tax, notices, audits, and so much more is going to be very important for your growth. So
Yeah.
let us know what
I
questions
think
you have.
if yeah, totally. I do 30-minute free consultations for any business owner that has questions about whether they're doing something right, or I kind of just try to get to know them and diagnose their needs. Sometimes people are a really good candidate for all-inclusive services, but sometimes you aren't there yet, and we can support you on either line, either way that you are in that spectrum, rather. But yeah, if you have questions, feel free to book it. I think the assistants put the link. We can't see because of the software we're using, but it
Mhm.
should be in the comments pinned there. Book me and let's talk. We'll see. Thanks.
Awesome. Guys, let us know. Let's just see on Facebook if they have any questions, just so we can answer it for them. Let's see. Any questions that you guys have? If we didn't, if we don't respond now, we could always respond later. And we will, or just message us. We are here to help have conversations. And by the way, guys, we don't sell you on the call, which most accounting firms or I know these salespeople do. We look at
Yeah.
your specific situation, and then we review your like we look at your specifics and then quote you and let you know all your fees in advance. So
We lost you, Rachel. No, I can't. I think we're done. I think we're done. Take off your mic, Rachel. Thank you guys all again for joining us today. I don't know, the mic thing is hilarious. We'll get it taken care of for the next one. I hope that you guys were able to get like some really good value from everything that Rachel discussed today. And I really look forward to speaking with any of you. If you have any interest or any questions, feel free to book us. And I'm not sure. We'll write in the comments when our next one is going to be, and we'll be talking about it on Facebook as well and sending out emails. But until next time, it was a pleasure. Take care, everybody.